Let me now bring on board Raamdeo Agarwal, co-founder and partner of Motilal Oswal Securities. Raamdeo, good morning and thank you for joining us. Surely your office was looking all green and all lit up, so it was looking quite nice. But let's talk about the market conditions. Where do we go from a lifetime high on the index?
From lifetime high, you go to even more higher lifetime high. So, you keep creating records every day, like US markets are making records for last almost, I think, almost for 6 months, it's going to be in newer highs every day. So I think equity boom is not only Indian phenomenon now, it's a global phenomenon. So much so that Europe is it's looking like a boom market for 2014. So India is much better than Europe. And now, finally we are into the new high. Valuations are reasonable. Earnings prospects are very good, and on top of it, you are talking about a management change, political management team, possibly a political management change in India. So, I think for at least 2.5 months, 2 months till about 16th of May, it's all story of imagination. How much you can imagine and put your money on. So, what I think is going to happen is that sellers will withdraw from the market. More than anything, sellers will withdraw. And new buying will come because of rising markets. So I think we are going to have some interesting times.
So Raamdeo, what according to you is playing out right now in the market? Is it a pre-election rally that everyone has been talking about?
Yeah, it's difficult to say, but my sense is that finally, this political change, which I think for last 5 months we are into the election mode. In the sense that this state elections which happened in December, that time it was a serious bid to launch Modi and BJP, and then we saw the emergence of Aam Aadmi, and it kind of broke the momentum which was building up pre-election, and then for 1 or 2 months it was struggling with the rise of the Aam Aadmi party, and as we saw the collapse of Delhi government and that popularity waning and people sizing up that Aam Aadmi challenge is there for sure, and it's going to be longer term challenge. But for this election, it's going to be much more contained in 5, 10, 15 seats, those kind of things. So I think once the market realizes that this challenge is limited, the way is cleared for the new government. I think market is, and then finally yesterday the schedule is also announced, and so this led to, I would say, build up of some optimism around the outlook for the market.
Raamdeo, so what will participate in this market rally going forward? The beaten down ones or the laggards?
I don't know. That's a very tough question to figure out what will participate, what will not participate. But one other thing which is going to happen is that the selling pressure which was there in the market, people were selling out of frustration, ignorance or pessimism, that will stop. So, a lot of very bad stocks, kachara jisko, like one of the things we say, could, spring up. So, I mean, a 40 rupees stock can go to 60 rupees just as without much of buying, So, those kind of things will happen. But the good, high quality growth companies, they will keep doing well. In fact, a lot of institutional investors, they will keep buying the blue chips and the growth, large caps. But I think what we are going to see, what I'm getting to see and hearing from the people is that either they want to buy very small growth companies or they want to buy very large, very unpopular companies. So some of the very big kind of traders, they are talking about buying. First time I'm hearing from them that they would like to buy State Bank of India. This rally would be led by SBI. That kind of talk also I'm hearing. So one side you have institutional investors, they want to buy large, popular growth companies, and other side the retail is coming up with by thinking of buying very cheap, discarded, thrown out, absolutely low valuation retail stocks.
So Raamdeo, is this the start of something much bigger? Elections aside, what about beyond the elections?
I would think so. I'm bullish optimist always, for last 25, 30 years. But it looks now after 4, 5 years of frustrating time, local investors have had completely withdrawn from the market. And even but they had a good reason for withdrawing from the market, because the economy was completely in doldrums. I mean, they don't operate in that top 100 or 50 companies. They operate in all the 3,000 companies or 2,500 companies which are second rung, third rung into the markets or industries. And those companies have not been doing well. Those businesses are not doing well. So there is a hope that this change of the government will bring some new changes in the policies or action, at least decision making. I mean, the complete paralysis in decision making for last 2-3 years will give way to a very rapid decision making, and hopefully it will be less of crony capitalism and much more transparent. And thanks to Aam Aadmi Party, I think it will be little less corrupt also, hopefully. So I think people are building up hopes around this particular new government, likely new government, and because things can't go worse than where it had gone to. I mean, so I think mood is changing somewhat, and I think other thing which has happened is that bond market has not done well. I mean, people who invested into bond market, they have not got very good return in last 1 year. Gold is completely flat out, and then real estate also has slowed down big time, in the sense that liquidity is out of the completely dried out, and most of the markets are not doing well. So where are you stuck? I mean, you want to make some money out of this asset class. So actually the clients have been at least patiently hearing this time. I mean, in last 2-3 months I am seeing there is appetite to listen to their stories. They are still not writing checks, and they will definitely miss out. I mean, if they delay too much, I think they will miss out. And it's see, in equities you need to bring patience. I mean, it is not a game of whether this government or that government. Businesses, those good businesses are making money in good time as well as bad time. So you have to buy businesses and sit through it 3 years, 5 years, 10 years. Longer the patience you have, better it will be for investing into quality companies.
You're absolutely right, Raamdeo. For those who've participated and have kept the faith going, they surely have made money in last 2-3 years. Raamdeo, but what also has made money in last 3 years is IT. Now that we are staring at a big sectoral rotation, high beta stocks are making a comeback, there is demand for cyclicals. What role do you think IT will play in the short term, and do you think best of the gains in IT are they over? Is the springtime for IT over, is what I'm trying to understand from you, Raamdeo.
No, in fact, I would like to correct. Indian IT is available at a very, very fabulously attractive price for the growth and the quality of earnings they have. And the quality of recovery, global economics is recovery. You're getting Infosys at what multiple? 16, 17 times, 18 times? So, I mean, what, 18, 19 times trailing. So, and they're likely to grow at maybe 15, 20%, 25%. And this is a top class management, top class earnings, very good payout, good yield. So, I think it's a very, very reasonable price. I'm not saying it's dirt cheap at 2,400, 2,300, but at 3,800 also it's not. If the India story is right, if their own change of revival of the management and the growth story is right, I think it's very reasonably priced. And only TCS is at about 22, 23 times, but rest of the pack is in below 20 times, which is very, very reasonable. And it is the best story out of India. And now the growth is also there. Transparency, quality of management, and it is walking into not in the Indian GDP of 2 trillion. It is serving to the global GDP of 70 trillion. So I think scalability is of a different proportion at altogether. And you see the market cap of your largest company. Largest company comes from this segment. Your TCS is at 4,50,000 crores plus, and the next biggest, your local companies, are at 2.5 lakh crores. So that tells the story that there is still a lot of opportunity. Indian IT took 15 years to come to $100 billion, but it will take just about 4, 5, 6 years to go to more like $200 billion. And $100 billion incremental is a huge thing. That will be shared by, bulk of it will be shared by top 10 companies. So I think the payoff is going to be quite massive. I don't think it is fully priced into the stocks. So please don't undermine the possibility of making money in Indian tech even from here.
Now the mid-cap IT companies, I mean, aren't there better opportunities than the larger players in IT, which now look sort of overvalued?
I appreciate how Persistent and all these names are very good. I mean, I'm not against any sized company. So long as quality is there, if you understand the quality well, I think even you can buy a small cap company, 200, 300. I mean, all these big data companies, they are not going to be I mean, the specialized niche companies are going to come out from India who are going to be offering big data, services, specialized services. They might be headed for 200 crores, 400 crores, 600 crores. I think they can be multi-bagger. So the issue is that don't focus on the size of the company, because when you are talking about global companies, I mean, even at $70 billion, it could be cheap. I mean, it could be very doable thing, 20-25% growth, and even at $70 million or $100, $200 million also, it could be very difficult to grow if your business model is not right. So I think you have to understand the company rather than focusing on the size of the market cap right now. Look at what is the competence and the business model of the company rather than just looking at the market cap.
Raamdeo, the export-focused sectors have done well, but going forward, will that remain as a dominant theme for the markets? And where do you see value within the exporter theme going forward?
No. See, in digital companies, there are everyday development happening. I mean, there are good companies, even if it is very, very domestically focused. They are doing well. I mean, it's not that 100% of all the companies who are catering to the domestic demand are doing badly. So like consumer companies were doing very well. Some of the infrastructure companies we have seen selectively, very, very selectively, they are doing, all the port companies are doing well because the port traffic is reasonably stable. So they are doing well. You have to find what is doing well. You have to very company specific focused rather than too much sector focused. And if the companies are not doing well, there is no cash flow, there is no, you don't know whether they can scale up, whether they can repay their loans, what they have heavily leveraged in the last 5-6 years. I mean, what is the point in just bringing them home, even if it is available very cheap?
Now, the banks have seen a very sharp rally, and so have NBFCs. What is it that you like?
I mean, all the housing finance companies, specialized, financing companies, I think they have a tremendous job to do. I mean, the banks stop at the branch level. Branch to the consumer level, I think it is going to be the job of all the NBFCs, particularly in semi-rural and rural area. I don't think the reach of Indian banks, particularly private sector banks, are that deep. So I think they have a very useful role to play for the small ticket loans and people who don't have proper backup of paper, the salaried and non-salaried people or SMEs which don't have a proper income tax records and all. But they also need vehicles, they also need home loans, they also need consumer loans. So that is not the right profile for the companies, for the banks. And that's where the NBFCs and all, they thrive big time. I mean, they do a wonderful job. So I think all these specialized NBFCs, they will scale up big time. And they have been scaling up in the last 5-6 years. And I think well managed, well thought out with a pan-India distribution, these companies can scale up probably maybe 8-10 times in the next 10 years.
Raamdeo, you're sounding bullish. You are of the view that the party time just about has started. So for someone who wants to participate in this party, what should they buy?
If you want equity-like return, better than your fixed income of 8-9% in an environment where the post-tax inflation CPI is more like a double digit. If you want to preserve your purchasing power, be in equities, but be in high quality equities in Indian markets and be fully loaded. I mean, we don't know how much markets will go up or down, but have the equities on your side, and the best friends are your quality stocks bought at reasonable prices.